how do you build a robust portfolio? A portfolio is all of your investment dollars here. How is your money allocated? Now, for the average person, the only way that they invest their money is through the 401k, and you might have a few different funds that give you exposure to different stocks. One fund might give you exposure to the general S&P 500. One fund might give you exposure to the general stock market. And maybe you have a third fund that's a little bit safer that only gives you exposure to the blue chip, very strong, stable companies. Now, when you do that, that is your portfolio. But the problem with a portfolio like that is a lot of times your portfolio is very heavily weighted in just United States stocks. So now if the general stock market goes down, if you see a stock market crash, well then your entire portfolio goes down. So if you want a portfolio that can protect you from anything, you want to have a portfolio that's built for anything. And that brings me to this, the all-weather portfolio. The all-weather portfolio is a portfolio allocation method that is designed to withstand rain, snow, and thunderstorms all at the same time. So it's a portfolio style, it's a way that you invest your money in different allocations. That way now you can protect yourself against anything. All weather. It was created by Ray Dalio, the founder of Bridgewater Associates. I've talked about him a number of times on our channel. He is the most successful hedge fund manager in history. He started Bridgewater Associates, which became the largest hedge fund in history. And the way that he was able to do that was by one, studying trends, and second, by investing money smartly. So he studied trends for hundreds of years, if not thousands of years, understood what has happened in the past, and took the past to predict what would happen in the future. And it has made him and a lot of his clients a lot of money. I mean, Ray Dalio is a multi-billionaire now because of his principles and because of his methods. So let's start by talking about his all-weather portfolio. So Ray Dalio's all-weather portfolio has money invested in three categories: stocks, fixed income, and commodities, with 30% going to stocks, 55% going to fixed income, and 15% commodities. So you have these three general categories right here: stocks making up 30%, fixed income making 55%, and commodities making the other 15%. But then he divides it up a little bit more. So if we start with commodities, you have 15% here of your portfolio going to commodities. And what he says, if you want to build this all-weather portfolio that can withstand anything, ups and downs, then in this commodities, you want to have half of this, so 7.5% is going to gold. And then the other 7.5% is going to a mixed, diversified portfolio of commodities to protect you against anything. And then when it comes to fixed income, which makes up 55% of our portfolio, he also divides this up a couple ways as well. So you have about 15% of this, which I believe is right there, which will be going to intermediate term bonds. So treasury bonds, United States treasury bonds, and you're going to be investing 15% of your money into the intermediate term bonds and the other 40% into long-term treasury bonds, LTTB, long-term treasury bonds, 40% of your portfolio there, and then the other 30% here, which is going into stocks. You want this to be invested into United States companies, United States stocks, and you can diversify your portfolio here by just investing into an ETF that gives you exposure to the general stock market. So this, according to Ray Dalio, is an all-weather portfolio that can withstand pretty much anything. And if we look at this chart showing the performance of the all-weather portfolio from 2010 until now, you'll see that the all-weather portfolio has grown quite a bit over the last decade or so, but compared to the S&P 500, which is the orange line right here, it hasn't grown as fast. Now, your goal with the all-weather portfolio isn't to achieve maximum returns, it's to get slow and steady growth. I mean, you can see in the S&P 500, you had these massive ups and downs. Like, look at this 2020 dip in the S&P 500 versus in the all-weather portfolio, you don't really have that. So the goal with the all-weather portfolio is if you see a crash here, this should protect you, or this can protect you. Or if you see a crisis in the dollar, well then this can protect you. So the goal with the all-weather portfolio isn't to get you the maximum returns, but it's to protect you against pretty much anything. That's why it's called an all-weather portfolio. Now, practically speaking, if you want to build out something like this, the easiest way to do that is just to have a number of different ETFs, and you can build a pie like this using M1 Finance. They're a sponsor of ours, and you can just allocate 30% to one ETF that gives you exposure to the general stock market. You can allocate a couple different ETFs that give you exposure here, and you can allocate a couple different ETFs that give you this type of commodity exposure. So if you want to sign up with M1 Finance for free, I'll put the link to how you can do that down in the description. But essentially, if you want to build this, you just need to have the right platform, and then you need to have the right ETFs, and then every week or every 2 weeks, you're just going to keep funding this portfolio. That way you can keep building this type of portfolio. Now remember, the goal with this portfolio is not maximum returns, it's more protection. So if you do not want to be super involved with your investments and you just want to build a portfolio that will grow and will continue to hold its value, even if the stock market isn't looking very good, well then this might be something that you want to consider. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide that goes over what passive income is, how to start generating passive income, and different passive income strategies. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.